tomorrow. We'll start with Mr. Morantz. Welcome back. Go, Mr. Morantz. 6 minutes.
Thank you, Mr. Chair. It's a pleasure to be here. Mr. Giroux, I have a few questions for you, but I just want to start with the latest Statistics Canada reporting that for the last 6 quarters in a row, GDP per capita has actually declined in Canada. Would you agree that Canada is in a GDP per person recession?
Well, it's true that when you have GDP per capita decreasing, it means that households are not getting richer. In fact, their standard of living is going lower. However, the GDP per capita recession is not a term that is widely used and widely used. So we tend to define a recession by GDP itself, real GDP declining.
It would be fair to say, though, that GDP per capita is receding as opposed to growing.
Yes.
Even though we can't officially call it a recession. Okay. Now, in your report, you estimated that the deficit will actually be just under $47 billion, roughly $7 billion higher than the Minister of Finance declared in the budget. We also have at least an additional $6 billion in new expenditures from the GST holiday and the $250 checks. The Minister of Finance had promised a fiscal anchor that supposed a declining debt to GDP ratio. Will she be able to keep that promise?
Well, it's difficult to say for certain. However, the GST holiday that was recently announced is in this fiscal year. The $250 checks, if they were approved by Parliament, would probably be in the next fiscal year. So there is a possibility that it will not significantly affect the capacity of the government to meet its fiscal anchor. However, based on our assessment, it is quite possible that the declining debt to GDP ratio will be at high risk this year. And next, it's also quite a possibility, especially if the increase in the capital gains inclusion rate does not materialize, then the fiscal anchor of a declining debt to GDP ratio would be more than jeopardized. It would be probably busted this fiscal year.
Okay, thank you for that. So you have some concerns as to whether or not the fiscal anchor can be met.
I do, especially if the expenditures I recently announced do materialize, and especially if the capital gains inclusion rate does not materialize. So that would mean that some revenues, several billions of dollars that the government was or is banking on this fiscal year will probably not happen if that legislation is not passed.
Okay, thank you for that. Now, regarding your fuel charge report, I know we've talked ad nauseum about the fact that Canadians pay more than they get back. That's been well established in your reporting over the last number of years, and that's just an indisputable fact. One aspect, though, when I was rereading your report that I found interesting was you actually say in the report that people's incomes will be lower as a result of the fuel charge. And I don't think that's something that we've asked you about before in committee. And I'm just wondering, are you saying that as a result of the carbon tax fuel charge, people's incomes in Canada are actually lowered?
Well, in aggregate, yes, because if you impose a fuel charge or a tax on various sectors of the economy, conventional wisdom suggests that the activity in these sectors will be lower, slightly lower, or significantly lower, but certainly it will be affected by a fuel charge or a tax. So the income, both the labor income and the investment income derived from the affected sectors is likely to be lower, slightly lower in that case. And that's based on modeling from Environment and Climate Change Canada. It's not just our own modeling.
Who would be worst affected? Whose income would be most adversely affected by this policy?
Well, it's those who have investment interests in the sectors that are most heavily affected by a fuel charge. So oil and gas, I think transport is one sector that would be affected, as well as individuals working in these sectors where profits would be lower and presumably economic activity will be negatively affected.
So it's not just investment income, it's income from labor as well.
Yes.
And do you have any numbers on how much on a sector by sector basis, or an example of a sector or a few sectors where incomes were lowered?
I don't have these numbers off the top of my head, but it's numbers that we have provided in our reports, I think. In our previous reports, that we have some broad sectors that would be affected, and we have quantified the impacts for these broad sectors.
Something that could be tabled?
Yeah.
Okay, appreciate that. And my last question is the $2.6 billion that's supposed to be going back to small businesses in the small business rebate in the estimates. That money should have been paid annually over the last 7 years. But the reality is that the federal government dragged its feet and is now finally getting around to paying it. There are businesses that don't exist anymore, that actually went out of business, people who went bankrupt because they couldn't make ends meet, that this money could have really helped them. How can we make those businesses whole? Is it wrong that they're not getting money that they should have been entitled to had their businesses survived?
Brief answer, please.
I think it'll be very difficult to provide that rebate to businesses that no longer exist, and that's probably as much as I can say.
Thank you very much. Mr. Halan, welcome back. Go ahead for 5 minutes, please.
Thanks, Chair. Mr. Giroux, always great to see you. The food professor recently in a report highlighted how the carbon tax adds to the overall price of food because it increases the cost for down the supply chain. This is because there's a cascading effect, as we know, because down the supply chain, when there's a carbon tax on the farmer, there's a carbon tax on the transporter or the trucker, there's a carbon tax on the retailer who's selling the food. At the end of the day, Canadians who today are struggling more than ever to afford food because the cost of food has gone up, it all gets passed down onto them. Mr. Giroux, would you agree that the carbon tax has increased the cost or the price of food for Canadians?
All right. So I think the answer is obviously yes. If you have a fuel charge or any other type of levy that's imposed on producers of food or any type of goods, you'd expect some of these costs, if not the totality, to be passed on to consumers. I can't comment on the study that you're talking about because I haven't seen the methodology, but and we have not estimated.
Overall,
in theory,
yes.
The magnitude is up for discussion.
Thank you. So recently, the government has introduced this 2-month tax trick where they're pausing the GST, HST on certain items. We know that GST is already not applied to a lot of the groceries. And in your report, as my colleague had highlighted, you had said about the carbon tax that it makes prices go up as income and makes incomes go down. Would you agree that to make things more affordable for Canadians, it's better to just take the carbon tax completely off of everything for everyone for good, instead of offering a temporary 2-month tax trick?
So that's a policy choice by the government, because a fuel charge or a carbon tax is not just to generate revenues. It also has other objectives, reducing carbon emissions. And whether one is better than the other is really not for me to say. It's up to the government and legislators to determine.
But as comparatively, would it be more beneficial to have a permanent tax taken off as something like AXA tax, get rid of the carbon tax on food, gas, and home heating? Or is it better to just have a 2-month GST pause when it comes to affordability?
If you're talking about affordability, and if the trade-off is between a 2-month tax reduction or a permanent reduction, I think the answer is quite obvious that a permanent reduction would be better to improve affordability.
Relaxing the tax would be better. You've also highlighted that this government, to no surprise, is going to blow through their budget deficit by $6.6 billion. This temporary pause, according to the government, is also going to add another $1.6 billion to the deficit at a minimum. What does this say about affordability for Canadians to have the government go even further on their deficit, is that going to help Canadians when it comes to affordability or make things worse?
Well, it depends on where these additional expenditures, if the increase in the deficit is due to higher expenditures, it depends where they are going. One thing that we can say for sure, though, is that when you have a higher deficit, other things being equal, it forces public debt charges to go up. And that's in good part why we have seen public debt charges go from the around $25 billion to 52 this year and expected to rise to 67 by 2030.
Mr. Giroux, I've been hearing from businesses about this temporary GST pause, this tax trick, that it's going to cost them because they have to change their POS systems twice, once before the change and once after the change. And this is happening during one of the busiest times of the year because it's around Christmas. We're hearing anywhere, some stores from $1,000 to $1,500 each, and they don't see that there's going to be a benefit from this at the end of the day. Have you done any analysis on the impact on businesses from this pause?
No, we have not done a study or an analysis on that aspect.
Thank you very much, gentlemen. Thanks. We'll go Mr. to Bain. Mr. Lawrence. Welcome back to Ogo, sir.
Thank you very much, and thank you, Mr. Giroux, for being here, as always. Just wanted to start off and just read a quote from yourself, back to yourself here, just to confirm you're still standing by. It's from B&M Bloomberg. If it's good news, they can play it up. If it's bad news, they may try to find a more appropriate time that it gathers less attention. It's quite likely that the government will have blown through its own self-imposed target of $40 billion deficit. Are those your words, and you still stand by them?
That if you're saying these are my words, I'll take your word for it. And that is certainly something that I could have said, maybe in different words, but yes.
Perfect. So here we are. We have the public accounts. Once again, it's like Groundhog Day every year. I think we get together and ask you this question as to why the public accounts being late is important and what type of impact it can have. And I know we've already discussed it a little bit. I think my Bloc Quebecois colleague asked some great questions. But just so Canadians can hear it once again, by having the public accounts be months and months late, it creates difficulties for your department, and most importantly, it creates difficulties for Canadians trying to analyze the budget going forward. Could you just expand upon that?
Yes. So in the absence of public accounts, we don't know. You and the public doesn't know what was the deficit for the year that ended March 31st. But for you as parliamentarians, you are asked to approve hundreds of billions of dollars of spending to various departments and agencies while not knowing how each and every one of them spent the money that you collectively had approved for them the year before. So you don't know how well they did last year, but you're asked to trust the government that they will do as good a job as last year, even though we don't know how they did this year, and please approve hundreds of billions of dollars of spending. And it makes it a bit more difficult to plan ahead for next year's if we don't know what the deficit was the year before. Not knowing what happened in the recent past, how are we to forecast the near future?
Let's talk about some of those what some of those numbers could hold. So you've said in that quote and then in other places that the deficit could be much higher than the agreed upon fiscal anchor of $40 billion, the self-imposed, I should say, that it could, is it out of the realm of possibilities that the deficit could be above $45 billion?
In this current year
Yes.
or last?
In this current year, yes.
Yeah, it's possible. And we've seen recent announcements regarding GST holiday of 2 months, and that is expected to cost, according to the government, $1.6 billion if there is no compensation for harmonized provinces. If there is compensation, then the cost would be significantly higher.
Also seen, or at least I've heard quite a bit of anecdotal evidence that that folks didn't have a capital gains fire sale with the deferred announcement of the capital gains. It was projected that something like $6 billion in revenue would be created. My anecdotal experience in talking to accountants and accounting firms, that really didn't happen, and so that $6 billion didn't materialize. Plus changes or mistakes made along the way. I mean, it could conceivably be as high as $50 billion.
It's possible we're in the realm of hypothesizing, not knowing exactly what will happen regarding the capital gains inclusion rate and not knowing what was the deficit last year, because very often if there is an unpleasant surprise with respect to the deficit, it tends to carry forward depending on where or what happened exactly. So it is possible, but it's anybody's guess at that point, depending on what happens for the rest of the fiscal year.
Yeah, and it really leaves parliamentarians with one arm tied behind their back, right? Because you sort of highlighted the lack of uncertainty. We don't know what the deficit is. And in fact, our leader has gone repeatedly in question period asking the Prime Minister, who does know, or should know at least, what the deficit was. It was, I should say, and we still don't know that. And so that it hinders our ability to have that discussion and to make the policy decisions that we want. Is that not true as well, Mr. Shrew?
It negatively affects your capacity to make or suggest trade-offs when it comes to spending and revenues, not knowing what happened last year. Yes.
Thanks.